I'm going to share some things about married filing separate when you have student loans and what you should consider. Married filing separate is a tax filing status. The other couple different statuses out there are single, married filing jointly, and the head of household. So if you're doing married filing separate, the reason you're doing that for student loans is to exclude your spouse's income from your income-driven repayment. With the new creation of the SAVE plan, Saving on a Valuable Education, that plan, in addition to pay-as-you-earn and income-based repayment, all of the major income-driven plans now allow you to exclude your spouse's income from the payment as long as you do married filing separate. Now, this is a really big opportunity, and the reason you want to be cautious about this is because you want to have the cost of filing separate and the additional taxes that you pay be less than the savings that you get on your income-driven repayment. So just to give an example, let's say you've got two people married making $100K each, your $200,000 income total. If you're filing joint, you're going to pay 10% if you have all grad loans on that $200,000 of income with a little bit of a deduction before you have to pay anything. So you do get to deduct 225% of the poverty line before you have to pay 10%. And so for this couple making $200,000, if they don't have any kids, maybe they would get to earn about $45,000 to cover basic living expenses before they have to pay 10% on whatever amount they earn above that. So let's just say that would be roughly $15,000 total annual payments, maybe about $1,200 a month, give or take. So if you filed separately for taxes, you're only paying based off of that one spouse's income, so it's $100,000 a year minus about $34,000 in protected income. So that's 10% of about 60-ish thousand, about $500 a month. So $500 a month compared to $1,200 a month, $500 a month is a much better payment. And so what you're looking for when you do your married filing separate versus joint analysis is, does it cost me more to file it separate than $7,000 in this case? If it costs you more than that, you should file a joint because you'd rather the money be going to your student loans and not towards taxes. But what most people are going to find is, especially if you have incomes that are similar, your cost of filing separate should be pretty minimal. So in the case of the this hypothetical couple each making $100,000, things you might need to consider are the dependent care credit, dependent care FSA. If you made a direct Roth contribution, you might have to do a backdoor Roth instead. So the total cost and complexity of filing separate for a couple like that is probably pretty minimal. Maybe it's $1,000, $2,000 a year. It's not that much. So filing separate would be a much better decision in that case. Now, married filing separate can get extra complicated if you live in a community property state. So there's 9 community property states total. States like California, Texas, Arizona, Louisiana, there's 9 of them total. If you live in one of these states, when you file separate, you're supposed to split your income 50-50. So there's a form for this. It's called 8958. You've got to reconcile what you have on your W-2s to what you're reporting on your income taxes. This is how you're supposed to file your taxes when you file married filing separate in a community property state. And then what you have to do is, if you feel like that income is accurate, then you can just have the IRS share your information automatically with the Department of Ed. If you feel like, hey, I make a lot less than my spouse, I don't want to have to report half of all of our household income, then you might need to file some alternative documentation of income with your servicer to get a reasonable monthly payment. So when you're thinking about married filing separate, the question is should you do it on your own or not? One thing that I would think about is, is it hard? Do you enjoy doing this? Would you rather spend your time doing something else? Student Loan Planner can help with the strategy of this. It's basically what we do, why we have thousands of reviews for it. So studentloanplanner.com/book is the place to set up a married filing separate analysis, and the cost is only a few $100 for our YouTube folks. And then if you need more help than that, we also have a tax team and folks that can help out. You just can reach out on the comments of the website or whatever. So married filing separate, remember, the cost of doing so has to be minimal compared to the savings on your income-driven repayment. Thanks so much for watching Student Loan Planner, studentloanplanner.com/book.